Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by First Mining Gold.
What does $1,900 plus gold mean for mergers and acquisitions? I'm with Dan Wilton. He is CEO of First Mining Gold. Dan, welcome back to Kitco.
Michael, my pleasure. Thanks for having me.
We're going to talk about mergers and acquisitions, but first let's talk about First Mining Gold. What are you focused on?
First Mining Gold focused on advancing its two main projects, the Springpole gold project, a 5 million ounce gold project located about 100 kilometers east of Red Lake, Ontario, that we're moving through the environmental assessment and feasibility process, and our recently consolidated 5 million ounce gold project at Duparquet in Quebec along the Porcupine-Destor Fault in the middle of the Abitibi.
I don't need to tell you, Dan, we've had a real switch in these markets.
You don't need to tell me.
We had the end of 2022, which was really tough. Now we're just off to the races, like a real surprise to the upside right now. What do these prices mean?
So, listen, I think what the prices mean is that I think gold is playing catch up to an extent. I think there are a lot of reasons why, as we're in the period of economic uncertainty, kind of rolling into rate hikes and everything, that gold was going to struggle. I think we're past that. And I think when I think about $1,900 gold and ask the question as to how and why it's moving up here, I think a lot of that has to do with central bank activity. And we've seen unprecedented gold buying from central banks. And I don't think that's done. I don't think because we are sort of at the pivot of interest rates that central banks are going to stop buying gold. So I think we're in maybe a little pause here. Tough to call it a pause when it's been up this quickly. But no, I think the longer term trend is very, very positive. But what that gold price, what people haven't really started thinking about yet on the gold price is, what does this mean for gold producers? What does it mean for cash flow for the gold mining industry? Because interestingly, many of the producers ran their budgets for 2023. You think about when they were setting budgets in the fall, a lot of them ran their budgets at $1,500 or $1,600 an ounce. So you have gold producers today sitting with $400 to $500 per ounce of excess free cash flow, like genuinely free cash flow. I think that is what I'm really excited about, how that gets redeployed, either given back to shareholders and redeployed, or the companies themselves using that ultimately to need to bolster their development pipelines because they just haven't invested in exploration and development for a decade.
You notice that what's happening with the quarters because, if there's an uptick in the gold price, that actually does a lot better with what is actually happening with the gold producers because they're just levered on that. The other pass as well, too, is that we've been looking at good, relatively good fuel prices as well. So we look at lower costs. So, they already cashed up from the last run that we've had. But if we look at these prices are going to be maintained, they're going to have a nice cash cushion to decide if they're going to invest or not.
Yeah, I think, and an unexpected cash cushion. And that's one of the ones that, the money's not spoken for at the beginning of the year, I think can help free up for things like strategic investments, for things like mergers and acquisitions opportunities where they really are starting to think about having the flexibility to think a little bit longer term.
So let's go back to First Mining Gold and let's talk about the recent announcement that you had as well too. You're kicking off a district scale exploration program at Birch-Uchi. Is that correct?
Correct.
Tell us about that, please.
Yeah, so this is really the first regional exploration that we've done in First Mining since acquiring the project in 2016. And a lot of this has to do with in 2020 and 2021, we were able to consolidate build the land package now to over 70,000 hectares. So this is really a truly district scale exploration potential where we think we've got now the mineral tenure covering most of the prospective geological structures that control mineralization in this belt, which has been largely overlooked going back decades and decades. I mean, it was originally discovered around the same time as the Red Lake camp, but access and infrastructure were more of a challenge. So it only ever saw maybe a tenth of the exploration spend that you saw in Red Lake or even in Pickle Lake. So there's a lot of gold to find here. And for us now, having built a great geology team really last year, going back to first principles, mapping, sampling, soil sampling, We flew a big district scale geophysical program, MAG and EM, to be able to really help in identifying targets. And we've got a bunch of targets that already have drill holes in them, which we've never really talked about before in this district, but we're not starting from scratch here. So we have 4 or 5 targets that we want to test in this winter program, a few holes into each of them, and then use that to be able to assess, go back, reprioritize, and hopefully, on success, hit it harder going into the fall.
Going in tandem with the exploration program, you also have a real initiative around community relations that you have around Birch-Uchi. Maybe you could talk a bit about that.
Yeah, no, and that's, we've been working with the Indigenous communities around Springpole and really trying to listen to how the communities want to go through the environmental assessment process, or really through their own assessment process. So we've agreed to fund what I think will be the first Anishinaabe-led impact assessment, which would be conducted by the 3 main communities around Springpole. And I think we're excited about that. It's something that is really important to the communities to make sure that what they find important is reflected in this assessment. And ultimately, a lot of that same material ends up getting reflected in the environmental assessment, federal and provincial, that we're going through as well. So we're really excited. It's just kind of getting kicked off. I think advisors have been selected, and it's something that we're pretty proud to be working with the communities on something that's a little bit groundbreaking like this.
In September, you had the announcement around the acquisition of Duparquet. Can you bring us up to date? Where is the project?
Sure. So the project is advancing. So we've consolidated, really for the first time since the 1950s, consolidated ownership of the Duparquet project in one entity. And so for us, the work program has really started as environmental baseline work. So there is the past producing mine there, some environmental legacy that really does need to be better understood. So we're starting on that work. And at the same time, we've spent most of the last 3 or 4 months digging into a new understanding of a modern geologic model at Duparquet, really starting to look at, we put out a resource in September, but starting to look at what work would we need to do to further that resource. So in some senses, looking at some of the infill drilling opportunities that we'd see there to increase confidence in it. But at the same time, using this new structural understanding to figure out where we'd put some exploration spend to demonstrate that this project can still grow, because it's really sparsely drilled below about 500 meters. And this is the Abitibi, Michael. We know the real deposits don't start until a kilometer down. So we'd like to do some deep exploration holes, but it's open along strike in both directions. And there's a couple of satellite pits that fit their way into the Clifton Star 2014 PFS and sit in our resource that are really limited, not from drilling, but just they were some of the last things drilled and never followed up on, because of the ownership structure and because of the downturn in the gold market. So we're really excited about getting going at Duparquet. We've had great community engagement from the community as well. Went to our first community meeting in Duparquet in November, and I think just have a fantastic level of engagement in the community. So we're excited about that.
Heading further east, you had an announcement also regarding Newfoundland. Maybe you could talk a bit about that.
Oh, well, Newfoundland is now pretty much is being moved forward by our partner, Big Ridge Gold, who has been, they've now spent, I guess, more than the $10 million to earn into the 51% at Hope Brook. They're doing great work. I think they're at the tail end of a drill program. They should have the final results out from that drill program here shortly. And then moving to a resource update, which we're really curious. They've had some really good exploration success at defining some new mineralized zones in between 2 previous areas that we had resource. So curious to see sort of how that evolves, how they're modeling it up. And we're hoping, as we do for all of our partners, on great continued exploration success and market awareness. And, we always loved that project. It just needed more energy and time and focus and capital than we were going to be able to give it, given that we've got 2 5 million ounce gold projects that we need to be moving forward. So once again, First Mining Gold is opportunity blessed. And, we really had to kind of pick our spots, but we also had to pick great partners, be it Big Ridge, be it Kitco Minerals, which is more than doubled the size at Pickle Crow, be it Treasury Metals, which is doing great work at the Goliath Gold Complex too.
Dan, how are you funding all this right now? Are you cashed up?
Yeah, we actually had a few pretty existential moments in the fall, particularly because to close Duparquet, it was in total about 10 million of cash to go out the door.
Good timing there.
Yeah, nothing like signing a big check on the 15th of September, going into what was one of the worst markets we've seen in recent memory. So, one of the beauties of how we have set up First Mining, and listen, this is really a blessing of the portfolio that Keith Neumeyer put together in 2015, 2016. We've got a lot of these projects. We've got partners who are spending money advancing the value of these projects. We still have those project interests. We've got a 30% interest in Pickle Crow. We've got still a 49% interest in Hope Brook. Our partner will earn up to 80, but we have a 20% interest. Both of those carried through to major milestones. And we have the royalty portfolio that we built as we've found partners and worked the ownership interests in these projects. So we ended up in December selling one of our royalties at Goldlund, that's on Treasury Metals ground, for 9.5 million Canadian. So that really goes a long way to our kind of 2023 spend. And then, we need to continue to look at what all of our funding options are, but really look hard at some of the things we have in the portfolio, the strategic interests, the other royalties, to use those for us to be able to do the real work that we're doing at these projects and do that without major dilution to our shareholders.
And you have a first-tier mining jurisdiction focus as well, too.
Yeah, and listen, I think that's one of the things that when we look back on what we have built, I think in a couple of years, that's going to be more important than ever. And the fact that, you've had major discoveries and major acquisitions in the Red Lake camp, particularly with Great Bear, which is, less than 100 kilometers away. We've got a lot of that prospective geology all the way up through the Birch-Uchi that's never been looked at. So we genuinely think there's opportunities for that size and scale of exploration, discovery in the Birch-Uchi. And then you've got, and I'm constantly blown away when you start looking at operating in the Abitibi. We're 30 kilometers or 35 kilometers from Rouyn-Noranda. We're less than 150 kilometers from Timmins. You've got every mining supplier in the world pretty much within a 2-hour drive. We're starting to look at exploration at Duparquet, as you said. You put out, bids for drill contracts, and there's just such a great host of really good quality, affordable, available suppliers in the Abitibi, and just that real culture of mining and can-do. So really, have been delighted with the way that that's working out, and, manifests itself in the fact that your per meter costs drilling in the Abitibi end up being, multiples less than the same meter that you drill at Springpole. So we're going to do both, and targeting different things. But I think it gives us, being in those two jurisdictions, I think gives us a real advantage over, any developer looking in places that are more challenging, for sure.
Finally, Dan, milestones over the next 12 months, some of the catalysts.
Key catalysts, so continuing to move through the environmental assessment process at Springpole. We filed that draft EA in May or June of last year. We've now received all the comments back from the federal and provincial regulators, the first comments back. And so that's a back and forth process, but really constructively engaged there. I don't know that shows up as, too many announceable milestones, but really important, week to week de-risking of the project as we go through that. We're looking at continuing on their feasibility process at Springpole. So we're probably 75% done, a feasibility study. We don't think we need the full fees until we're closer to that EA approval, but that will manifest itself in probably a pre-feasibility study update before the end of the year. Just once we're locked down on the flow sheet and on the development plan and the environmental plan at Springpole, once we've kind of gone through all of the regulatory comments, I think we'd like to reflect the economics of that in a current study, because we get asked the question, your capital costs were done in 2021, what's happened to them? And there's been a lot of scope change in really constructive and good environmental thinking on how the project's changed over the last couple of years. So I think we'll want to put that out so the market can look at that. And then to the extent, we make good progress on the Anishinaabe assessment, I think that's something that we'd like to talk about and hope that becomes really kind of a standard for the industry. And then, drill results at the Birch-Uchi and a couple of the drill results, which will be a little bit closer to the Springpole deposit, but exploration results coming there. And then on Duparquet, we've just kicked off a PEA, which we'd like to have out, before the end of the summer is the goal. And that will help us scope and really do a bunch of trade-off studies on what that development could look like, size, scale, grade. We know that there's a higher grade core to the Duparquet deposit in an open pit. So really looking at how we compare and contrast the economics there. And then starting exploration at Duparquet to, again, demonstrate continuity, demonstrate that we're getting a better understanding of the deposit ourselves, and remind people of some of the fantastic grades that they found in here. Like, we were displaying core at Roundup last week. It was like 40 meters of 5 grams in an open pit, like just off a highway in the Abitibi, right? Like this is a deposit that people just have forgotten about. We want to remind people of that and demonstrate that, the resource that we have there is the starting point, not the end point. So lots coming for First Mining Gold, both on exploration and technical de-risking of both those projects this year.
Dan, it's always a pleasure.
Absolutely. Thanks for having me.
My name is Michael McRae, here at the Vancouver Resource Investment Conference for Kitco Mining.
Kitco Mining, special coverage of the Vancouver Resource Investment Conference, is brought to you by First Mining Gold.